Well, oil hitting the skids today, down about 2%. You got coronavirus fears out there impacting global growth, as well as high inventories in oil. Two things behind the drop. For more, though, on what this might mean for the energy trade and maybe on some parts of the stock market, let's go off the charts with our friend Todd Gordon of Ascent Wealth Partners. Todd.
Hey, Brian. Let's take a look at crude. Nothing positive here in this chart. We just have just a range-bound market. We got recently slammed up here in the mid-60s, heading back down. We have kind of a deflationary trend here going with that bond market acting so strong, maybe a strong dollar. I don't see much to push crude higher. I'd like to focus in, though, on a very weak sector within energy, which is XOP, which is oil and gas exploration. There's a lot of natural gas influencing here. Natural gas breaking to a new 4-year low here, below the 2 handle. So XOP is very, very weak. We've got a failure at the 200-day moving average, hanging on for dear life here, about the $20 region. I think that's a vulnerable level that goes. And just to underline my point, take XOP, make a ratio into the energy XLE. You're seeing that XOP underperform energy. So no touch here. One of the names that was formerly a pretty strong, relatively speaking, stock was EOG. It's begun to kind of roll over, has a lot of natural gas exposure. Again, failure at the 200-day. If you just do a nice little trend line there, do your perfect parallel. Again, we've got collision at the channel. 200-day starting to back off here. I don't like EOG. If you must have some energy exposure, look at Kinder Morgan. We just reported earnings, kind of missed, but had some good news in terms of investments for next year, $2.5 billion going forward. So I like the stock here. We have begun to push up. I actually added it to my personal portfolio here about the $23 mark. I think we might have room up to about 27. KMI looks good after that earnings report, so maybe look there.
But it's a no touch on XOP.
Absolutely not. Now, if you want to short it, perhaps, but no, this whole value argument that energy has been underperforming for so long, and it's a compelling valuation. It's weak for a reason. I would stay. We'll go nowhere near it. There's other sectors that are moving. It's underperformed the S&P. Energy as a whole over the last 2 years has underperformed the S&P by 37%. So for me, I'd wait for some kind of technical evidence, compelling reason, buyers to step in on some thesis to say the energy trade is back, but no, not right now.
Yeah, and with ESG investing growing, I don't know if the buyers are going to come back. Todd Gordon, Ascent Wealth Partners. Todd, thank you very much. I mean, we haven't even talked about it, but Tim, there's a Libyan warlord who's basically shut off all Libyan oil exports. I mean, they're not huge, a couple 100,000, but it's still
a major supply disruption.
Something, and yet oil continues to fall. Even before the coronavirus fears, oil was falling, by the way.
Well, even with a draw today, right? We're expecting inventory draw is expected.
Well, I did this two weeks ago. I did a thing on the exchange where I just did the math. There's 2 to 3 billion barrels of oil in storage in the world. 2 to 3 billion.
Yeah, and we spent a couple weeks ago around some of the conference and the Goldman event and whatnot, talking about the fundamentals for the companies. And look, ConocoPhillips is down, I don't know, 7% during this run, and I think is trading near the bottom of a range, and I believe is oversold. This has been one of the smarter companies in terms of being proactive and having a long-term plan in terms of how they're going to handle assets and not over-investing in the sector. So Conoco and Chevron, to me, if you just want to play it safe, those are the best companies, the best balance sheets, and I think you're not overextended.
I'm glad. And we had the CEO Chevron, by the way, on that conference, who basically said, I'm not increasing my capital spending. We're going to remain fiscally disciplined, whatever happens to the price of oil.
No, quickly, I'm glad you mentioned ESG because we had Halima Croft here, I believe, last week, and I asked her about these big cap integrated names, and one of the knocks she talked about was exactly that. And you look at ExxonMobil, which not only made a 52-week low today, made probably a multi-year low today into earnings at the end of the month. And we can talk about valuation, and I totally get it, but people seem to be fleeing these names in record numbers, and you got to really
institutional investors. They're selling, guys.
You got to be concerned.
Some of these pension funds are not allowed to own. They have to sell them. So you wonder if this artificial selling at some point ends. Will there be a fantastic buying opportunity?
Except for pension funds don't trade actively, and if they've made this allocation move, it's not going to change overnight. I mean, that is a very important technical dynamic here, unrelated to this fundamental story.